Good afternoon, everybody, and welcome back to another presentation about another stock. Today, we're talking about Talisker Resources. It is a stock that can be found on the Toronto Exchange under the ticker TSK and on the over-the-counter market in America under the ticker TSKFF. As always, we are going to talk about the management, the project, the capital structure, the balance sheet, recent news, and of course, my opinion. Starting off with the management. Starting off with the CEO of the company, Terry Harbert. It is a ex-senior manager of the discovery team of AngloGold. And AngloGold is a $40 billion market cap gold producer, so it's a very big player in this market. He was the manager of the discovery team of the La Colosa and the Jarmalote deposits. The La Colosa region is a project in Colombia, and AngloGold states that they have found a very large porphyry-style gold deposit there. On their website, they don't give too many specifics about it, so I don't know how many ounces there are in that deposit. But the other deposit, the Jarmalote deposit, is also located in Colombia. It has since been sold to B2 Gold, and that is a pyrite-type gold deposit, which holds about 5 to 6 million ounces of gold. So in these two deposits, you can see that this man has a lot of experience in Colombia with different types of deposits. He is also the former chief geologist of Bakerville Gold Mines, that is a explorer in Canada, which was sold for approximately 230 million US dollars and is currently named the Caribou Gold Mine that is being developed by Osisko Development. That is Osisko Mining is a very big gold miner. They have a development company specifically for the mines that they develop, and this man sold the Caribou Gold Mine to Osisko Development. The Caribou Gold Mine holds upwards to 5 million ounces of gold, and they have recently received the permits for the mine. So we can see that Terry has got a lot of experience with different types of deposits, and it's very good to see that his previous discoveries have size and economic value. The fact that his previous discoveries are worked on and are currently being developed by Osisko is a big plus for me. Turning our attention to Leonard de Souze, the Vice President of Resource Development. He has 35 years of experience, 21 of which are in the production of mineral resource estimates. The majority of experience has been in brownfield exploration, that is, exploration in places where there has been previous mining activity. This experience is validated by the fact that he has added 9 million ounces of gold to the resources of AngloGold's South America projects, so that is the projects including the ones in Colombia, and 2 million ounces of gold and almost 5 billion pounds of copper to the resources of the projects in Brazil. So you can see that both of these gentlemen have lots of experience in South America, and on top of that, they have worked together before and created success together. And that is one of the key things that I look for in management. It's previous success, especially with their team members, most preferably in the jurisdiction that they are currently working in, which unfortunately is not the case here. If the management of the company has worked together in the past and has created success there, there's a bigger chance that they will do it again in the future. This is a big plus for me. And lastly, the Chief Financial Officer, Andreas Tinijaro. He is a CPA, so he is a certified accountant with 30 years of experience in finance, compliance, financial strategy, and reporting. And usually I report about the CFO, usually there isn't too much interesting to say, but this man has a very interesting past because he was the CFO for the United Nations, the State Bank, and Osisko Royalty. He was also the CFO of Trelawe Mining, which was sold for IAMGOLD for $608 million, which in 2012, which was the peak of the market, was a valuation of $100 per gold ounce in the ground, which is about a 17% resource value. And that is part of the reason why I use the 15% buyout value in valuing these gold deposits, because as you can see, deposits do get sold to big companies for that amount at the tops of the bull markets. This man has done it in the past, he nailed the top, and with this CFO you can see two very good things. He has good global connections with the United Nations and the connection to Osisko, which in parts connects him back to the other members of the management team. So you can see that all of these three gentlemen have worked at the same companies in the past. They have extreme success there. They have good connections. I like that. That's a big, big, big plus for me. Moving on to the board of directors, starting with the start. The CEO is on the board of directors, and I never like to see that because the CEO can then always write their own plans and vote for them in the director meetings. This blurs the oversight function that the board of director has. Next, the chairman of the company, Morris. He has 35 years of experience in the mining, entertainment, and the real estate industry. And when I first started out in this business, my mentor always told me that mining is a lot like real estate because the location is more important than anything when buying a project. Seeing the connection here is somewhat logical for me. What is also very logical to see is that this man is the chairman of Bakerville Gold Mines, the mine that all the members of the management team have also worked on. Another management connection here, a very, very good sign to see. Stephen Burleton is a capital raiser. You know, every company needs somebody like this. He has previously been the interim CEO of Agnes Gold, which sold to Westdome Gold, and he has also been the president of GT Gold, where he brought in Newmont Corp, which is one of the biggest mining companies in the world, as a strategic investor. He was also the vice president of business development for Tickmon Mines, which was sold to Alamos Gold for $770 million US. So you can see that this man has good connections with big mining companies and has been able to close multi-$100 deals before. Having somebody like that on your team is always a good thing. Next is Robert Power. This man is a former practicing lawyer, which has served as the CEO of privately held mining companies. And very notably, he has been the chairman of the Ontario Trillium Foundation, and that is a charity where the grants to the charity have increased from $12 to $100 million under his leadership. So this man, again, is very connected to big and influential people. Otherwise, you wouldn't be able to increase your grants like that. Last up is Christy Smith. She is a member of the Comox First Nation, the indigenous people living near the land on which this company is exploring for gold. And having a member of the nations on the board of directors is a very good development to see, since there is direct contact with the people living in and near the company's land. So this will potentially help the company with future developments and the permitting of the project. As you can see later on in the presentation, we will get into that more. So in short, I believe that this management team has great connections with each other. They have worked together in the past and produced success. That is a great thing to bring to this project. And they have also got good connections with big money, big mines, and the people living in the area around the company. Besides the CEO being on the board of directors, I really have nothing bad to say about this management. This is a very good start to the project. I'm very impressed about this management. Moving on to the project. Well, projects. The company owns two projects with mineral resources, the Barlone and the Latner project. Together, the company states that they have mineral resources of 2.6 million ounces of gold for both projects. They also have some greenfield exploration, that is exploration with no previous mining history. I will not be talking about those projects in this video. I will show you really quickly how large the position is that they hold, but I'm not going to go into the focus of looking at greenfield exploration. That is just not something I want to do in these videos. In this video, I will instead only focus on the projects that have current resources outstanding, starting with the Barlone project. The project is located in the region of Barlone, that is why it's called the Barlone project, in British Columbia, Canada. The project has a mineral resource estimate done, and the company owns a 33-kilometer project area in a historic mining area with 3 old mines present on site. As you can see in the picture, there are 3 historic mines right here, right here, right here, and the current mineral resource is right there. The project has been operated since 1928 until 1971, and the people who have been in the gold market for a long time know exactly what happened in 1971 and know why a lot of mines have stopped mining then. It has been explored by a lot of companies. I was reading the mineral resource estimate, and I think there were like 10 or 15 companies that have been exploring this region. In 2011, the mine was put back into production, with a very small output of 85 tons per day. And after another acquisition of the project, the mining was discontinued in 2017 and Talisker bought this project in 2019. So in 2017, there was a study done to see if it was feasible to produce a 400 ton per day mill, but there were some problems with the gold recovery there, and thus there was no more work done on building their own mill ever since. Currently, meaning in the recent month, the company has been looking at another company to mill the projects for them, which they have signed a deal with. We are going to go over that in the recent news all the way at the end of this presentation. So I had some questions regarding this mill and why they didn't continue the work, but the management team of this company have already answered that question with the actions that they have provided. Again, reading the MRI, the mineral resource estimate, you can see that a lot of companies have tried to do something with this project, but all of them failed to increase the resource substantially and to get the project going. Previous mining ventures that went deeper into the mine itself encountered some water issues as well, so keep that in the back of your mind when we are looking at the project itself. I'm gonna remind you about that again at that point. There have been multiple companies that have drilled this project to see if they could find more gold, but they failed into increasing that substantially. But since 2016, the current owners of this project have increased the mineral resource from 400,000 ounces at 9 grams per ton to a current mineral resource of 1.6 million ounces at 6.3 grams per ton. That is, in my opinion, a lot of ounces at a very high grade, and the company states that they might have an additional 600,000 to 700,000 ounces of gold that cannot be added to the mineral resource because the drill holes that they drilled them with are too far apart. But I'm not going to add them in any calculation because that is just too much speculation for me. And since the project has already been mined before, there is still some infrastructure in place. Just like in the previous presentation I did about 1911 gold. If you haven't seen that video, go check it out after this one because these two projects do look alike a lot. Currently, the company is drilling the project. They're working towards an economic assessment. Looking at the image on the left, you can see the project, the scope on it, and in red, the current resources. In pink, the pink line that goes through the project is a government-maintained road. So the project is accessible by car, and that is always nice. Zooming in more, you can see that this Google Maps picture shows you that there is a small town nearby. In the bottom right, you can see the town, including some of the infrastructure the company owns. And in the top left, the brown field, you can see where previous mining activities have taken place. So here is the small little town with the company's infrastructure. And this is some of the piling area the company owns as well. In this image, you can see a better explanation on what infrastructure is still in place. You can see that the company has some buildings for their operations. A couple important ones are still missing: the mill and the processing plant. The core cutting facility used to be a mill when the mine was still in operations. So that is this area. This used to be a mill and this used to be the stockpiling area. But since they currently do not process their own ore, this shop is just a core cutting shop. You will see later in the presentation in the recent news that the company has signed an agreement with a third party to mill and process the ore for them. I do believe that they've done that because they have encountered a couple issues with the purification of the gold that they find. So that is very interesting to see that they just picked up third party to do it instead of doing it themselves. It's going to cost you a little bit more, but if the gold recovery is better and if the production is quicker, then of course that is a good thing to spend some money on. So diving into the deposit itself, we are looking at a picture of the currently already mined parts of the mine, colored purple, red, and green for the different zones. You can see long horizontal lines going through the project. Those are the current and already existing mine shafts in the underground mine. So to be clear, all of these parts have already been mined out. So this has already been mined, this, and this. And the current mine shafts are still operational. And the water issues that they have encountered were in the lower parts of these mines. So that might not be a problem. anymore, because in this image, we can see the resource that the company still believes that it has in red. It is good to know that the resource is still highly uncertain. All the ounces that the company says to have are inferred ounces, meaning that they're mathematically implied ounces, and you cannot take them to the bank to get a loan against. So you can see a couple colors here: red, gray, and some pinkish and bluish colors. The red color are the current mineral resources that they have still yet to mine, and the gray ones are the things that they have already mined. So if we overlay these two images on top of each other, you get this. We can see that the resource they currently have overlaps what they have already mined, also overlaps the already existing infrastructure that they have. So getting to the resource will be easy for them, but then again, the resource itself is still uncertain. Overall, this project has some good infrastructure in place, but the ounces that they have or claim to have are still uncertain. Moreover, the fact that the previous companies have explored the project extensively and only produced a 400,000 ounce deposit is questionable, given the fact that the company currently claims that they have 1.6 million ounces plus maybe even more than 500,000 more ounces than that. Lastly, the fact that work has been done but not continued on a already small 400 ton per day mill is a little miss for me. I would like to see a gold mine having size and its own infrastructure in place to mill and process their own ounces. So that is something that could have made the project better for me. Company is currently working on upping their production as well. So we'll see where it goes in the future, and we'll see how many ounces the company actually can extract from these zones. Moving on, the next project is their Lutner project. The company bought this project from Coraline Gold for about 2 million. Coraline bought the project previously from somebody else, but they paid it with debt, and they couldn't pay back the debt and sold the company to Talisker, who paid off and assumed the rest of the debt. The project was previously in production, having and owning a 1,500 ton per day mill. So that is very interesting, but the mill collapsed in 2004 due to heavy snowfall, and afterwards the company just left it there, and no more mining activities have been done on this property. This is a Google Maps image of the project. As you can see, there is very little trace of mining activities in this area. So the property is currently not being used much. And in this image, you can see how the mining claims overlay the Google Maps image. So you can see that there is road access to the property here and road access to the property there. They used to mine it right there, and there is a small but well-maintained gravel road that goes through here to the highway. So the project is still accessible. In this image, you can see that the two projects that the company owns, the Barlow and the Lutner project, are about a 4-hour drive apart from each other. So there is no arbitrage that can be done by creating one mill to mine out both deposits. These will be two separate deposits that the company will own separately, which raised a little question with me, because why do all this extra work to have two deposits? Why not just have one deposit that you are currently mining to pay for all the greenfield exploration? Why then also buy a second property? But you know, that is for the company to answer. Turning back to the project again, here we can see New Caroline Gold has done a previous acquisition, and they have done some good drilling work on this project. You can see that the mine that they have mined in 2004, you can see that they've drilled a lot of holes there, and they have been able to produce this image. This is an illustration of how the company has already put in place some mining infrastructure. The black lines you see in this image are mine shafts that are still there, and the red, yellow, blue, and green zones are the mineral resources that the company says that they have. I do understand that this image does not give away a lot of value. It isn't very clear. I would like to have put in a better image, but this is the best that I have been able to extract from their mineral resource that they've produced in 2012. And in this image, you can see how the company thinks that the resource is spread out in the mine. The brownish upward sloping mine is the hill outline, and the blue, purple, and red areas are indicated and inferred resources. So keep in mind, this report is from 2012, so the data is quite old. I do understand that the Earth itself doesn't change much over that time period, but the project has been dormant since, and there hasn't been much work except for an airborne survey in this project. So I would like some more data on this, but the company itself isn't putting much effort in this project. They are currently more focused on the other project. Then lastly, but very quickly, the greenfield exploration. The company owns about 90 kilometers of mineral claims alongside British Columbia. And this is a pretty big land package. They have found some gold anomalies here. They have done some drill holes here. If you are interested, go look at it yourself and make your own opinions, but I'm not here to speculate on greenfield exploration. I am here to judge gold deposits. Let's look at the deposit that they have. We can see that the company owns an indicated resource of 33,400 ounces and an inferred resources of about 2.5 million. And at a gold price of $4,000 an ounce, the deposit is worth, in my eyes, about $1.5 billion US dollars. If we turn to the share structure, we see that the company has currently about 175 million shares outstanding and about 25 million warrants with 10 million options for a total of 213 million diluted shares. At a share price of 96 cents, that gives the company a market cap of just north of 200 million USD. There is apparently some dispute going on the ownership of the shares, since a judge or arbiter holds 13% of the stock, which is quite a large position. It is actually the largest single position that anybody holds in the stock. I don't currently have any information about that. I tried searching for it, but the company didn't provide much information about that. Maybe it's buried in some press release. I didn't see it. If you do have some information about that, let me know. Besides that, New Gold owns 10% of the company and insiders own 6.3% of the company. And at the current prices, that is about $12 million of insider exposure to this stock. That is at least some skin in the game. I would like to have seen a lot more, but it is what it is. Moving on to the balance sheet of the company. The company has not yet released the latest financial statement, so the information is from the 30th of June. I do want to say before we start with this that the balance sheet was looking kind of ugly because there is some debt on the books. And starting off with the debt, the company had at the time two separate debts outstanding. One convertible loan for $4.3 million at a 12% interest rate and a strike price of $1.15, meaning that if the share price reaches $1.15 a share, the company can issue shares to repay the debt, which the company has done on the 3rd of October. So that debt is no longer there at the moment, but during the period, the company did pay $200K in interest expenses on that debt. In general, a junior mining company owning debt is a recipe for bankruptcy because you have no income, you have no earnings, there is no projection for you to have earnings in the future, and the only way to repay that debt is to get new people into the stock, sell shares to repay the outstanding debt plus the interest. And nobody is gonna give you money just for you to spend it on interest expenses. So given the fact that they had that is a little bit of a red flag for me. And the second debt that is still outstanding is a royalty that they have sold to Sprott Royalty. For the people who don't know how Sprott Royalty does their royalty structures, you give them the royalty to the project. Let's say you give them 1% of the net smelting royalty. That means net 1% of the top value of the deposit once you start producing it. A Sprott Royalty gives you, let's say, $10 million for that, but you have to pay that $10 million back once you start producing. So it is a deferred payment. And during the time that they've lent it to you and that you start production, they will charge interest on that In this case, the company got 11.5 million US dollars for the royalty, but they have to pay it back once they start producing, and they have to pay 18.5% interest. That means that if the company takes a couple more years to start producing, then that debt that they have keeps increasing at 18.5% per year. It's not a cost right now, but it will be a cost once they start producing. So that will be a little damper on their profits for the first, let's say, a couple quarters, maybe a year, maybe 2 years of their production. Next, the company has spent about 500K in salaries, 450K in financial fees, less than 100K in share-based payments, so I do have to applaud them for that. They spent 700K in debt payments. That is split into the current and the deferred payment. So the current payment of the debt that was outstanding, that they have, the convertible debt that they have converted to stock, and a deferred payment in that for the Sprott royalty debt, which is non-current, but still debt once they start producing gold, which is a month ago they started producing gold. And next, they've spent about 200K on office and administration, and they've only spent 70K in exploration. So with such a low exploration cost, the company spends about 2 million a quarter just in burn rates, generally in relative costs to the project itself. This is the worst exploration to G&A ratio that I've seen doing these presentations, so that's definitely a minus for this company. If you, I changed this part of the presentation a little bit. The fully diluted shares 1 year ago were about 90 million. And the fully diluted shares on the 30th of June were 140 million. So that means that in 1 year, the company has diluted its shareholders by 62%, which is extremely high. And also given the fact that they have a burn rate that almost all goes to G&A, that is very unfortunate to see. If we look at the projected value of this company, you can see that the value of the deposit right now is 1.5 billion. They have a share count of 213 million, meaning if you pay attention that as of the 30th of June, they had 134 million shares outstanding, but right now they have 213 million shares outstanding, meaning that the company even further diluted their shareholders by another, about 20 to 30%. Anyway, at a current share price of 96 cents and a dilution rate of 62% per year, you can see that the current multiple that you can expect on your money is 7.6x, but that drops to below 1 between 5 and 6 years. So buying this stock is a bet that the company will start producing gold within 5 or 6 years, turn a profit, and stops diluting its shareholders. If they do that, you will make money. If they don't, you are guaranteed a loss after 5 years. But in recent events, the company has announced that they have sold their first gold from the Barlow Gold Project. They have sold 707 ounces of gold, generating proceeds of about 2.3 million. If you do that math, you will see that they've sold the ounces for about 2.8k each, which is below market price. So I would like to know what happened there and how they are going to get that up. But more importantly, they've also signed a ore purchase agreement with Ocean Partners for up to 1,500 tons a day. Reading the news release, the company is pleased to announce the signing of a binding agreement with for the ore purchasing with Ocean Partners up to 1,500 tons per day and a 25 million credit facility. This credit facility will be used for development of the mine and for working capital. So you can see that not only has the company started producing its first gold, they have also fixed the issue with the mill, and they have recently, after the 30th of October, they have ramped up this production with Ocean Partners, and they will start producing 1,500 tons per day starting in January 2026. So that's 1 quarter away. So I do expect that in 2 or 3 financial reports, this company will have turned a big profit, not looking at the debt that they have to Sprott royalty. That will probably need to be paid off first, but they will definitely have big earnings coming in, being able to explore their own greenfield exploration programs. So that's the runway that this company has, which, if you've seen my video on 1911 gold, is the same game plan as 1911 Gold has. I do expect that that game plan works out really well. It is just a question of which company can execute it better and which company is going to be lucky in finding their next gold deposit. As you can see here in the last news release, you can see that the company has done another private financing for $23 million Canadian. So even further diluting the current shareholders, and hopefully after that they will get the earnings to either stop diluting or to start diluting less. In my opinion, I do have some questions to the management team, which I would like to ask. How did the resource of Barlow increase from 400,000 to 1.6 million ounces? And why were you the first company to do that out of the whole list of companies who tried to do that before? Are the water problems still a problem, or are they no longer relevant since you are not going to mine deep down in the mines anymore? You're going to mine more shallow. Is that water problem still going to be there? And why does the arbiter own 13% of the stock? What happened there, and how is that going to get fixed? Other than those questions, I do have to say that there's a very high dilution rate in the stock, and there is a high deferred debt payment. So that means that if this company is just going to go on the way that they have been, not counting in for their plans, you are going to get diluted very heavily. However, you're getting for that a very competent management team that has worked together in the past and created success. They recently started production, which is like the last couple months they've started production with a ramp up to 1.5k ton per day production in 2026, which will be about a 60 to 70,000 ounces of gold production a year if you count that out at the rates they're mining, which is a very small producer. But if they do it well, it can be very profitable and it can fund their greenfield exploration. So they have clear steps to production with a large exploration package to go with that. There is some discount between the current share price and the deposit value, or the current market cap of the company and the deposit value, but that discount is going to be eroded away pretty quickly because of the dilution. So this is a very timely matter. They are, however, in my opinion, cashed up with the recent placements, so I do expect the dilution to at least slow down in the future. It might not stop, but it can slow down. And having said that, we have reached the end of my presentation today. I want to thank you for listening. I want to thank the viewer for sending me this stock. I thought it was very interesting to look at. If you have a stock that you would like me to look at, please leave it in the comments. And while you're there, like the video, subscribe to the channel, and I'll see you in the next presentation. Thank you. Bye bye.